Welcome back to MyStockScanner Live, powered by the 3-point playbook. We cut through the noise, scan the market, and run every stock through 3 simple filters. It's about quality, upside, and timing. Hans-Henrik Nielsen and Liam Flavel are charged like rechargeable batteries, and they're ready to go. Liam, yesterday it almost looked like there was a sector swing in the market. All tech went down and all pharma basically went up. I know on our platform we are working on sectors to be able to differentiate between the different sectors within our platform. How's that work coming?
That work's doing really well. We should be able to show something on Friday. That's what we're aiming for on that. But I was looking at our test version today, and the swing over the last week is very interesting. Just in our playbook portfolio, all the ones that are waiting. So I think it's going to be good.
Well, we're going to leave you with that teasing and talk more about it on Friday. Hans-Henrik, you posted yesterday in our groups on Facebook, but also on the platform about copper. We know that silver and gold has been sort of in favor with buyers. Copper, are we having a shortage?
Yes, we are, basically, and that can lift the copper prices up significantly over the coming years. A lot more is being used than is being produced.
As you can sense, I'm the guy with the question. My name is Jesper Behrens, but I'm not the only one, because we definitely have questions from our users as well. And apart from digging up a nugget in our stock of today, that's Freeport-McMoRan, or easier said, FCX. We'll be talking more about the upcoming articles from Hans-Henrik in regards to mining. Also looking forward to Thursday Tech from Liam, and we do touch tech on the show today when we are crossing over NVIDIA, SoftBank, CoreWeave, AppLovin. And we also have the result of the Thursday poll, where we asked our users, where will Novo be price-wise come Christmas time? And then we had numbers from Lundbeck, and that was quite a roller coaster ride. We'll get to that ride later in the show. Number of the day, because we were put on a ride by our tech on Monday, we didn't get to number of the day. So basically we have the same number with the change. It was 132 days on Monday. Today it's 134. And I want to bet that it's 135 come 10 o'clock tonight. What that number is in regard to, we will get to in a second.
So it's a different number.
No, it's a different number.
You changed it. You said it was the same number.
No, but basically I had to add in the 2 days that gone by, Liam.
It's a different one. I'm a techie.
Yeah, I know. It really has to be 0 and 1s until you understand. So, but let's see if we get this one, because there was numbers out from Lundbeck yesterday, and that has led to an email sent to us at FOMO@mystockscanner.com from Alan. He has a bunch of questions in regard to us selling Lundbeck from the portfolio, the 3-point playbook portfolio. And Hans-Henrik, if we just quickly run over, why did we sell the Lundbeck?
That was an easy one. There was I think it was Jeffries coming out yesterday that were lowering the targets to, was it 39 or something like that? That made the stock drop. We were not selling because they came out with a new target. We bought Lundbeck. I can't even recall the exact date. But what happened since was that it had moved in a sideways range, and we were thinking it was going to break up. But yesterday, what it did was it broke straight down with a lot of volume through this green line, which is the 50-day moving average. That is normally our exit line. Also, our daily MTI indicator down here in the bottom had turned red. So we had kind of of 2 warning signs. Normally, when this happens, we look at how far is there down to the 200-day moving average. And at this point yesterday, there was 10-15%. And that is simply too much. We have seen too many times stocks that just collapses when this happens. So this followed our rules. What happened yesterday, though, was that it broke down and then came a bit up, and I was giving it a bit of time to see our buyers really coming in now. But at sometimes around noon, I think it was, the sellers were the strongest. So I sold it. However,
but Alan is also asking in that sense that when things like this happen. That was the case with Jeffries, but also we're coming into earnings, and their earnings was fine. So he's basically also asking, is there any places where we change the strategy on a stock, or do you just stick to the strategy all the time?
No, we stick to the strategy. I wouldn't say there can't be a time where we are making an exception, but just because they were coming out with earnings later on the day yesterday, that didn't really do anything for the strategy. Because yes, we can see right now, if we look at the live, we can see that this green candle here, that it is going up. It's up 5% today from the close yesterday. That, of course, can be a bit annoying to see a stock we just sold, but we don't really care about that because we are not trading just one stock. We're using the same strategy all over our universe of stocks here. What could easily have happened, we have seen that a ton of times this earnings season, is some earnings came out a bit disappointing maybe, and it could have dropped 10% more. And one of the things in our portfolio is that we don't take large drawdowns. A good example of a stock where we could have used the same logic of just saying, yeah, shouldn't we stay in a bit longer? That is, for instance, Betco, that we made some money on, but we sold it here back on the 20th of August. The day after, it actually had a stellar day, and people were teasing us a bit and saying, you shouldn't have sold, should you? And since then, it's down 20%. Isn't it, Jesper?
It is, and somebody always hope for a rainy day. Other people hope for sunshine. It's a mind game in that sense. But no, let's not get personal here. Just say that again. You have to leave your feelings at the door when you follow your strategy. There's no second
you
guessing.
have to be a robot. It's basically, not to say that there isn't a few times, and we are looking at the bigger scope once in a while. For instance, with the defense stocks, where there was a geopolitical thing that said, we better get into that and be a bit more exposed to that. Or there can be different things, but overall, looking at the stocks, this one, that might go up and we might buy it again and lose 10% on what we could have gotten on the upside. But also it could have dropped 30% and we would have been in that if we had stayed in. So we are sticking to the strategy that we have developed over a couple of decades. So we're quite confident here.
And in regards to Lundbeck, if you toggle really quickly and go to the playbook and just scroll down and see where we're at the moment.
It's still a absolutely decent stock. For those of you new here, we look at quality, we look at pricing, and we look at timing. And the quality here, the more green we have, the more quality, and we can see Lundbeck is a good quality company. When we ask if it has a good potential, it absolutely has. In our value chart here, without going in depth with that, we can see that there is a potential for some good upside, but that can change as well. So we would like to see buyers in control before we buy in again.
So far, the Lundbeck. Let's change scenes and let's get the Irishman talking here, because there was some news yesterday about SoftBank basically emptying their drawers from NVIDIA stocks. And Liam, you are techie. So in that sense, what's going on here? Because that seemed almost contradiction.
I think it is. I was a bit confused, scratching my head. I mean, it sounds like they're calling the top of the market for NVIDIA. That's what everyone's going to think. They're not saying that particularly in the press release they've got out. What they need is more money to fund the investments that they've promised. So they put in a lot of work into getting data center projects started, and they need a hell of a lot of cash. And we've been talking about that over the last 2 or 3 weeks in the various articles that Hans-Henrik and I have done. So the issue that they've got is they haven't got enough cash. So they need to sell one of their star performers. In 2019, they did the same thing. They sold NVIDIA, and they lost, I think it would have been the biggest deal they've ever done, $232 billion in profit. So they haven't got a great track record in this. The other really interesting thing is that they're effectively going to be taking the money that they've got from NVIDIA, and they're going to be putting it into companies like OpenAI and other data centers, which are then going to buy NVIDIA chips. So they're actually boosting the NVIDIA share price as well. So we actually think this is for NVIDIA, which is a really, really strange thing to say. So here you've got the playbook page for NVIDIA. And you can see, I mean, everyone knows NVIDIA, I would guess. It doesn't need much introduction. But they've got a quality score of 100. They are the company to own out there. But are they too big? Are they too expensive? Are they too overvalued? And, when we're looking at their earnings per share, it's looking really rosy. When we look at their PEG ratio, which is the relationship of the analyst estimates where they think it's going to go and the current price, and the lower number the better, then that looks like a good score as well. It's only got a health score of 5. We don't use the health score too much in this. We'll go into, I might write an article at some stage on the Petrovsky score, but it's a bit old fashioned these days. But the analysts love it. The returns are fantastic. They haven't got a debt problem. Are they undervalued? They're right at the top of the channel. So for new users out there, we tend to have 4 different values on our value chart. The red is the worst case scenario that we can think of. So I'm really matching the numbers down here where the price dipped. That's where we put the red line. And if the earnings go up in the way the analysts think, then you've still got quite a steep increase in there. You've got the analyst line as well, which is where the analyst thinks that the stock's going to go to. And then the bull case, which is the perfect scenario where everything goes right for NVIDIA, that's got a huge upside. And then we've got the base case where we actually think it's going to happen. Now, our base case shows that there's potential for a 40% increase, and our bear case shows that there's a 9% increase as well in the worst case scenario if we held this stock to the end of next year. So for us, it's a win-win on here.
The question is right now, because we're coming so close to earnings with them. They're coming up on earnings, I think it's on the 17th. And plus, we're coming towards the end of the year, which means that we can put another year in the charts that you just showed us. Is that going to change sort of the perspective whether or not that you would buy on a day like this or you wouldn't?
Well, with earnings coming up, we wouldn't buy now. It's in our model portfolio for the 3-point playbook, so we can boast that we've already got that in there. It's been in there for about a month, something like that. So we're 5% up or something. So if we look at the numbers, I've just added another year on. The numbers are even better, just with a 20% increase. Now, to be honest, the numbers that are coming out of the AI industry are far higher numbers than that. So the growth is this is understated. And we're still looking at a doubling of NVIDIA in the best case. However, as you say, with earnings coming up, if I was going to go into it now, I would wait for earnings. They're in next week, I think, aren't they?
17th,
and 17th. Yeah. So I would wait for those to come through and then jump on afterwards. You may miss a few percent, but actually this is a long game. You've got 100% potentially to be in for by the end of 2028. So yeah, a few percent probably doesn't make too much difference.
Okay, so far NVIDIA and the whole thing in regards to SoftBank and them selling off the entire NVIDIA portfolio, as Liam said, I think it came as a surprise for most people. I don't know if we were surprised yesterday when we put out a poll where we asked our users and also our members, but everybody on the platform, basically from ActieSnack to ActieAnalyse and into the members group, about where would Novo be at the end of the year. We did that in our Tuesday poll, and hans-henrik, you're going to get the honors here to tell us a little bit about how that poll came out. We gave some different sort of, bands of prices that it could crawl along, and definitely. Some complained that it was too wide.
Yes, and it might have been. I might have been a bit too lazy on not plotting enough time brackets in or price brackets in. However, it is a bit funny because we can see here we have the MyStockScanner members group, and when we asked them, and we got quite a lot of answers here, we can see that the majority thought it would be around 300 to 350. And Jesper, can you just look up where it is right now? It's 20 something.
We're talking the stock price. It's 322.40.
Yeah, exactly. Yes. So right now we are here. First of all, let me just say we are not normally trying to predict prices and say exactly where stock will be. That is not our game, and it's basically impossible. However, this is a bit of a fun game, and in our members group, and these are people that are normally used to use our system. Most people thought it would be 300 to 350, and then the next one was in the 350 to 400 bracket here. If we go into the AktieSnack group, which is 57,000 people in here, we got many hundred answers here as well. And here they believe in the next bracket, mostly in the 350 to 400. Also down here in the 300 to 350, but there are a lot of them answering 400 to 450 or above 500 actually. So we were analyzing this, and we couldn't really agree if we, for our members, if we are teaching them to be pessimists or realists. But at least we are teaching them to look at the numbers and have some sort of conservative look at stocks. So that might be that. It will be interesting to see around New Year where it ends.
We're going to keep the voting up. So if you haven't voted yet, you can go in and vote and give your opinion to us in any of the groups that you are a member, and then we'll take it down at the end of the week. So it won't be around until Christmas, so you can guess it right at that time. But we'll take a look at it when we get that far. And it will be interesting in that sense to see if Novo will make a bounce back. Again, it's one of those stocks where basically every day there's a new story, there's something that's going to push it or influence it or anything, because anything with Novo is a news-related story here in Denmark, and it gets covered big time. We had an example yesterday where the story was basically that Eli Lilly dropped CVS as employee drug plan after that CVS started selling Novo's product. And
yeah, there was a bit of a revenge thing in that, I think.
I think so. But there's no doubt we will be talking Novo. We're always doing that. It is, after all, the stock that every day basically have in their portfolio. Maybe the next stock could go into your portfolio. It's not a recommendation, but we have something that's called stock of the day. This stock, and this is really a test in language. I think I'll call it FCX because that's the easy way. And Liam, you get the honors of saying what stock it is.
It's Freeport-McMoRan. Or McMoRan, depending on how you want to pronounce it. In Irish, that would be McMoRan.
McMoRan, yeah. And we're back in the mines here. How come that we sort of segue back to that now? Because we have had a lot of mine stocks in the portfolio, has sold them off. Are we looking to walk back in again?
This is an interesting one, actually. Hans did an article, which I think he mentioned earlier on, about mines and or about precious metals and other industrial metals as well, that are looking like they're going to be in a downturn. Yeah, the amount of material that's being produced is much lower than we're actually requiring. Freeport is one of those companies. They produce mainly copper, but they do other things as well, gold and those sort of commodities. But the copper is the key one out there. The reason I say it's key is because copper is what drives the data centers, it's what drives the AIs, it's driving the power generation that's creating it, it's driving EVs. You need copper to do pretty much anything electrical out there. So, and if there's a deficit in the market, then that's going to be good potentially for the copper miners. When you look at Freeport, the issue they had, and you had a bit of a drop here. So we're just looking at the playbook. Look at the first question, which is it a quality company? You can see that at 79, yes, it is a quality company. 79 out of 100. We'll look at anything over 56 to 60, something like that, or slightly lower if there's a really good reason to. What you can see here, though, is that the earnings, certainly the continuing earnings, where you take out the one-offs from last year and then extrapolate that going forward for the earnings per share, is actually dipping and then going up. And people that watch us regularly and read our reports regularly know that we absolutely hate that, because you've got no guarantee it's actually going to go up again at the end of it. In this case, with a little bit of digging, which is a mine company, so you need to do some digging, you can find out there was a big mine collapse and a mudslide into a mine in September this year, and it's pretty much knocked out for the next year or so 35% of Freeport's copper revenues going out there, and the earnings are associated with them as well. But even with that, you can see the PEG ratio is at 1.74. It's below the 2.5 that we look for, so there's good growth perspective out there. The returns are pretty good, so the company is pretty good at taking on money that we give them and actually turning that around into profit. And the price free cash flow, so that the amount of cash that's generated from the business that they can either invest or give back to shareholders is pretty good. The price free cash flow ratio is below the 35 we look for, and the current ratio and the interest coverage tell us that the company hasn't got a debt problem, so we're buying into a quality stock here. When we look at the valuations, then things are actually looking pretty good. We're almost at the end of this sort of slight downturn in earnings out there, and then it starts going back up again. And we can see that all the way along, we've been hovering along this line. If I just drag the red line down here, we've been sort of hovering along that between this channel, the upper channel here, and the red bear line and the analyst line there, which is what we like to see a lot of the time, because that means that the market is taking the analyst numbers and saying, yeah, okay, we believe you, because actually when the price gets down to that level, it's going to bounce up again. So we see a potential of 85% in the best case next year and 25% in the worst case. So it's a good potential right now.
And it is not a recommendation. It's just simply the analysis that we have here that we're doing. And we wouldn't buy it now because everything is red in the MTI. So in that sense, that's where it stands. Hans-Henrik, you're going to do more about mines in the coming days. You promised a new article. And again, copper was sort of the emphasis here. But one of the things that I always find fascinating is what you use the different materials for, because gold is sort of, that is sort of of course, a speculation thing, whereas silver is a usable metal. The same goes for platinum. The same goes for copper, of course, like Liam just explained.
Yeah, definitely. There are a lot of these industrial metals that are, in my opinion, very undervalued right now. It takes a long time to develop new mines. And when you see year over year in the estimates saying we are using far more of the metal that we actually produce, and we know it takes 5 to 10 years to develop a new mine, we know there'll be an upwards pressure on these metals. So we are writing a lot about that in some in-depth analysis for our members these next weeks.
And that can be found at the platform, which of course is MyStockScanner.com. And remember, that's the place to find the articles. Some of them will not come on the social media. It means that they won't show up on Facebook, neither in ActieSnack nor ActieAnalyse or the member site. We are moving slowly to move all the materials into our own website. One of the things that we will share with you, interesting or not, 134 days was number of the day. And that's a matter of fact, what S&P 500 has closed above its 50-day moving average for 134 days. I'm almost going to give you guys a beer if it drops under today. I doubt it'll be 135 days. And why is it important?
Because I doubt you'll buy the beer.
You will. I'm not Scottish, so of course I will. Now we get sued by somebody. No, but as I said, this is the third longest streak that the above 50-day moving average that the S&P 500 had been on. The longest streak dates back to 1995 to 96. That was 257 days. The second longest, 149 days, that ended in February 2007. We are almost at the end of the show for today. Remember, more earnings, more numbers, more articles always coming your way on our platform and definitely also on our social media. Tomorrow we have earnings from Tencent, Baba, Disney, Siemens, Enel, but also on the home turf, so to say, Alcabello and Sealand, Friday Bavarian, Siemens Energy Alliance, Auckland, and many others. We will keep you updated. As said, articles always to be found. Questions always welcome. FOMO at MyStockScanner.com. And before I let you guys go, Hans-Henrik, a little trivia question for you. Have we heard the last of 50 years mortgages from Trump? It's a thing that's been floating around. We can't make up if it's satire or not. What do you think?
No, the 50 years is not a satire. The 15 years on a car might be, but I am sure we haven't heard the last thing about 50-year mortgage. It's completely insane, but it's a talking point right now.
Talking point or not, Liam, I'm going to put you on the spot, and I know you hate this, not because you're Irish at all, but NVIDIA was down 3% yesterday. Tonight, when the US stock exchange closed, is NVIDIA going to be up 3%, more, less? What do you think?
It will either be up, down, or the same, I reckon. It's I hate that question because actually we're longer term than that, so we're looking at next year. The small amounts, it will grind upwards over the next year. We're pretty certain. There's no other place to buy chips.
Yeah, exactly. So that's how it is. This wraps up today's MyStockScanner Live. We try to keep it simple. We talk about quality, upside, and timing because that's a three-point playbook. And with MyStockScanner, you can keep investing with confidence and you can sleep peacefully at night, or else Liam will come sing you a lullaby. We'll see you on Friday at noon. Until then, happy investing, guys.